Hey, it's Mark, and I'm gonna do a video on some of my trades today and Sotherly Hotels. Sotherly Hotels is another one of those deep value stocks, and that's kind of what I've specialized in over the years is looking at those and finding those that have more potential than the other ones out there. So you have to be very selective with them, and a lot of them, they just turn out to be duds because they're cheap for a reason, but some of these are not cheap for a reason, and the Sotherly Hotels is one that I analyzed months ago, and I'm actually looking at the preferreds here. Like the preferred shares have a 10% dividend yield now, and it was about 8% dividend yield when I analyzed it months ago. I actually did this one. This was one I looked at a way long time ago, back in July of 2023. So it's below their net tangible asset value. And Sotherly, they operate about 10 hotels. They've got the Hilton name and Marriott. And if you look at the Hilton and Marriott stocks, they keep hitting new 52-week highs, and I even mentioned that in the article that I did. And Hilton Hotels hit another 52-week high today, up to 191, and the Marriott, I believe, was up new high today too. Yeah, Marriott was another 52-week high. So these have been going up for a while, and even back since because I did the blog post, or I did the Substack back in like the summer of 2023, and these stocks are up like huge percentage off of that even. But the SOHO still continues to underperform. So we look at the Sotherly, this hotel holding company, and it's been sort of a dud. It was in that trading range for a long time, and then it actually was down after earnings. And I haven't thought their earnings were that bad. Like I mean, looking at the big picture, the cash is about the same on the balance sheet, and like revenues were flat, which isn't great, but it's not like they're gonna go out of business anytime soon with hotels. I mean they're in the hotel business, and that's all they do is hotels, and these other hotels are doing well. So in theory, similar businesses were gonna do the same. So, but the investment sentiment on this one just hasn't been there since COVID. I think what happened is a lot of people just bailed out after, like when COVID hit in 2020. Like the stock was annihilated, and they cut the dividend. It used to be a really high dividend stock. That's why I first noticed it. Was it had like a 5% or more dividend yield consistently, and because it's actually classified as a REIT. It's a real estate investment trust. So when they cut the dividend, and COVID hit, that's when I think all the investors just bailed out, and but they never came back, which is strange. But I don't think it's worthy of this valuation. I mean, it should be selling for more than their their net tangible asset value. Like it's basically selling for what the hotels are worth. If you were to just sell the hotels. So it's really to me it's just undervalued. I mean, I could be wrong, and it may just stay undervalued for years, but because it's a really small company, and it's got like a 50 million market cap, so it's not really on the radar of any big institutions or anybody. I mean, just like small hedge funds might invest in it, but looks like they bailed a long time ago. But I don't see why it's still as cheap. I mean, you've got the other hotels breaking out on new highs, and but since I'm talking about the technicals on this one, it's got a support level here back at about 134 is where somebody stepped in and they bought a lot of shares, and it's got support there. It's where it got accumulated before. So if we watch this line, if it breaks above that line there, this down channel, it's got a good shot. If it holds this support and then breaks above like 142, well, to be safe, like 143 a share, then it's off to the races, I think, and it goes back up to probably the 160s, 170, but it should be worth a lot more. I mean, so I'd like to see it go a lot higher, of course, but it's still right around the net tangible asset value. I think it's not a huge discount to net tangible asset value, which it never really was, but it's uh, it's right around that value, and they report earnings in March. So I just saw a press release on that. The their Q4 2023 is on March 6th. So we gotta wait until that happens. So we'll see. Like, I wouldn't be surprised if it's a good quarter, with the way the economy is going, and um, I would expect their business to be doing pretty good, with with the way a lot of these cyclicals have been doing. So, and I was just looking over the balance sheet again just to make sure I'm not crazy, because this thing's still at the lows. Like it's still really cheap. So the balance sheet still looks pretty good. Like, the last quarter we had the current assets were 41 million, and but the meat here is in the properties. So that's where most of the net tangible asset value, or the tangible asset value, is. So it's about the same. It's really simple to analyze. It's like I kind of like why I put that one out there is, there's not a lot of moving parts here with the business. It's not like some pharmaceutical company or biotech company, or even a car, or even a retail company, or like clothing. There's not a lot of uncertainty about the business. It's a pretty simple business, and they're paying down debt too. Like, I'm looking at their long term debt. They're they're paying down their debt. I think that's the long term debt line right there, and it's steadily decreasing. It's on a 319 million now. So I'd say keep your eye on that one and see if it does hold that support level. Because the way these work is, you buy a basket of them. You buy a bunch of these cheap stocks, and then some go up, some don't go up. But if it starts to go up above, if it holds that support level, then it means somebody's gonna keep buying. It looks like so. But it's a pretty messy chart now. It's pretty ugly. So can't really say, like, the chart looks like a buy, but fundamentals wise, I think this one will do well over the long term, over the next few years. So that's that one, and I did put on some trades today, like AMC. I finally bought the AMC puts. So it failed. Excuse me, it failed that. It had to try to bounce there. And this is a bear flag, so we're back into this grind down. So it's just doing the same thing it's been doing all January, just going back down again. So I got the $4 strike puts, and pretty happy with those, and they're holding up pretty well so far. So those look like it's a good trade I put on there. And the Tesla I got out, just like, I think I made like 20% or less, which is pretty bad because it was down a lot on the day. But I sold the puts at the open because the stock was down so much. Like, to have that kind of big of a move, they usually gap up. it's just like the mean reversion, but and I put on TLT puts, and I kind of waited a long time on that one too. So I'm kind of chasing that too. So, but we'll see about that one. But these are all pretty undersized because I'm not seeing a lot of great setups here. Like a lot of these sectors are starting to kind of slow down here. Like I've been watching, like everybody's watching like tech and Nvidia, and yeah, they're going up a lot every day. But there's the Nasdaq, right? So everybody's watching that stuff and Tesla, and that's. But if you look at like these home builders have been going sideways since December, and they're at risk for topping out there and breaking down because we're in a channel here. So, and that failed up there, that breakout. So if we break down here, that's a pretty good could be a top signal, at least for a while, for months, but it's still got a lot of support back at back around 83, 84 bucks. So but the momentum just slowed down there, and it's gotta break out of that channel if we're gonna continue to hit some more highs, and it's kind of the same thing with the industrials. They've slowed down too, and they never really were huge gainers, but this chart's broken momentum too. So the momentum broke when that line broke there. So that's another one, and I'm sure there's a lot more sectors that are doing the same thing, but those are kind of the ones I've focused on that I've been watching a lot of the stocks. And yeah, XLPs, same thing. Yeah, I drew that trend line a long time ago, and but this makes sense though because it's staples, so it's not high beta, but still even the momentum there died, and there's lots of more sectors too, but I put on some rocket puts a long time ago, like a week or so ago, and because the way it rocketed up here to like 14 seemed a little too fast. So unfortunately, I missed most of that down move, but I put on some like $8, some like crazy lotto puts. Just when I started seeing XHB slow down too, and then I put on some open puts too, because it looks like, it's in a down channel, and it tried to break out here, and then it still hasn't convincingly broken that down channel. And the Redfin channel looks even better. Like the Redfin, see, it's right up on resistance. I can't remember if I put on Redfin puts too. I think I did. I hope I did, because the Redfin is just, it's in a down channel too. The momentum broke back here. That was the uptrend momentum, and then it broke, and then now we're in a down channel, so it's going down. So it kind of just looks like the XHB a little bit, but those are things I've kind of noticed that I've been watching a lot, and I watch like a lot of like Bitcoin and crypto too, but I think those will probably have their run later on in the year, because that's sort of what's been setting up with the halving coming up. So yeah, those are the only ones in there, and then yeah, the rewalk. Like this was a really good setup off that bear flag, and it kind of failed to break out there. So we're back on trend support. So it's really got to go tomorrow, or it's got to hold this trend support, or the setup's gone. Like it really faked out. It faked out there on that bull flag break, and but it really looks like a bull flag because it's still holding trend support and the volume's just perfect on the flag. So but we'll see though. I mean, this is like a micro cap or a really small cap stock, so there may not be enough buyers coming in, but we'll see. And the RGTI looks like it's still just back in the channel. This one's really slow. It's kind of speculative. Like I just think there's a chance that that more of these computer companies, like quantum computer companies, get some more traction here because they've gone into every other computer play there is. Semis, data centers. You know, they're sort of running out of places to go to work in tech. This KSCP had a big bounce today, but it looks just like it's still in a downtrend. So let's see if see what the Russell did at those levels because those are pretty big. Yeah, it's still holding below that major level there, that kind of that teal blue. It's still below. It could be trying to uptrend there if it holds that, because that's kind of been the uptrend. So that actually wouldn't surprise me because it broke that down channel. It was down channel there, and then that could be a flag on this new possible uptrend. Now that I see it kind of stall out there, it makes sense. Or it could fail, but either way, it's I think it's just more likely to go sideways, but we'll see on that one too. Like I was saying, like a lot of sectors kind of died out. Like even biotech, like biotech's died out. Kind of momentum stopped. And the biotech was really strong. Recently. So the fact that it had the best relative strength, back in like December and January, healthcare, but or some of the best. I'm not sure it had the exact best relative strength, but it was really strong, and it's even stopped. It stalled out too. Probably VHT too. 'Cause VHT had, yeah, look at that. See VHT, the Vanguard Healthcare ETF, was really strong, even when other things were pulling back, and it finally broke that uptrend the past couple days, really. So that's another kind of bearish thing going on. But some of these stocks were leaders. So yeah, that's it. I covered a lot of stuff. So we'll call it a wrap, and I'll see you in the next one.